with respect to these reusable credentials and reusable identity that, it's just going to take a tiny spark to start, a blazing fire that leads to massive growth. And I can't wait to see it happen.
Hey everyone, my name is Nick Lambert. I'm the CEO of Doc, and welcome to Identity, a podcast all about digital identity and Web3. It's my great pleasure today to be joined by Justin Newton, who is the CEO of Netki. Welcome, Justin, and many thanks for joining us today.
Yeah, Nick, I'm really happy to be here. Thanks for inviting me.
It's great to have this conversation. You and I have spoken a couple of times before about some different projects and things, but it's great to have the chance to kind of have a two-way interaction that's a bit more in-depth and kind of crossing different aspects of the industry. So let's get right into it. So could you please introduce yourself to our listeners and also tell us a little bit about Netki?
Yeah, for sure. So I'm Justin Newton. I'm the co-founder and CEO of Netki. We're a company that's been focused in the digital asset space for almost 10 years now. And primarily, we've been focused in the areas of digital identity and identity as it relates to things like risk and compliance.
And then what got you interested in identity and then the kind of verification aspect of it as well, Justin? And what part of that keeps you motivated to continue to stay in the industry, a decade in? What really excites you about it?
For sure. So, there's a few things about it. So for us, when we came into the digital asset space, at the time, you would have just called it the Bitcoin space. It was back in about 2014. There were a few other things like Dogecoin and things like that, but like Ethereum was a year away from being launched. And after having, a 20-year history building internet companies and internet startups, when we looked at the digital asset space, we actually saw Web3 coming. That it was going to be something where there was going to be these open and permissionless networks for innovation. But we also knew, based on the timing of where we were, that frankly, it was just way too early to figure out all the problems that these new technologies were going to solve. And so instead, we wanted to look at what are the problems the technology is going to have if it's going to get to mass market adoption. And identity, specifically as it relates to things like risk and compliance, came really to the top of the list very, very quickly. As a second point around that, even if compliance didn't become something that was going to come to the forefront, which obviously it has, the networks themselves were trustless. And, crypto anarchists may be happy interacting with hashes of public keys, but the way that most people establish trust with each other is actually based around identity. And so, whether it was for risk and compliance purposes or just so people could know who they were interacting with, it was clear that identity was going to become one of the key enabling technologies that allowed these new networks and these new platforms to flourish. Finally, long before my co-founder and myself worked in identity, we were privacy geeks. And so it was important to us as these new technologies emerged and evolved that privacy was a key focus around identity as new standards were being created and new practices were coming into play. The second part of your question is like, what keeps me excited and interested in it 10 years in? Honestly, there's really a couple of factors that come into that. One is the space keeps emerging. As you know from the work that you've done, what's happening with Web3 identity and Web3 technology is super exciting because it puts the power around identity back in the hands of users instead of in the hands of large centralized organizations like Facebook, Twitter, or Google, which both empowers users but also greatly enhances their privacy over something that was there in the past. And being able to be a part of helping to bring that forward and bring that kind of into existence and more mainstream use is obviously a really exciting thing to work on. The second thing that keeps it exciting pretty much every day is because of the field we work in around digital assets, DeFi, crypto, while most of the clients we work with don't have an identity fraud problem, the handful that do, it's really the deep end of the swimming pool. It's professional criminal networks in Eastern Europe and Asia. It's cartels in Latin America and state level actors. places where there's frankly professionals that go into the office every day to try and figure out how to defraud our systems. And we get a bit of the excitement around ensuring that we're able to keep those bad actors off of our clients' platforms. And I like competition, and so it's fun to be in those kind of battles.
And I'm sure you've got plenty of competition in that field, Justin, as well. It was interesting hearing you speak because I was also been involved in the industry for quite some time, and it was amazing at the start, like you say, kind of 2014. I think, like Ethereum's ICO, I think was probably like, I don't know, it was like June of that year or something, and that was obviously long before they built anything like you mentioned. I think that the first iteration was launched the next year, and it was amazing then. It's still amazing now that a lot of decentralized platforms, they're still of the view that kind of code is law to some degree, and that actually real world laws and regulations are absolutely not required, and they actually rebel against them. And of course, the reality is somewhat different. Regulations can be there to be a good thing and protect people as well, and that technology in and of itself is not sufficient. But it's interesting because I've had that same experience as well, and still come across quite a lot of people in the space that really are quite anti-regulation, very pro-market, and think the technology can do it all, and the reality is somewhat different.
Yeah, for sure. I mean, just some comments on that. You know, I in some ways I have a similar mindset. I wish that there was less need for regulation. Unfortunately, if you sort of look at the ecosystem that we operate in, whether it was things like happened with Terra Luna, what happened with FTX, which were sort of maybe consumer protection or consumer fraud issues, or you look at some of the recent issues that came up around Binance that were more related to anti-money laundering and counterterrorism financing. We haven't necessarily done the best job of policing ourselves as an industry. And in my opinion, that's actually dramatically hindered our path to mass market adoption and to growth, because consumers, that aren't already familiar with what we're doing and what we're building, don't necessarily trust us or trust the things that we're building. And so, regulators are now coming into our space. Whether it's, I'm currently sitting in Abu Dhabi, which is right next to one of the leading regulators in our space, Abu Dhabi Global Markets, who's doing a DeFi consultation in Q1 and Q2 to come up with the, regulatory rules for the road around DeFi, which, generally ADGM has been very proactive and pro-growth in the industry, but with putting safe guardrails around what it is that people are building. Or whether it's, the United States, where when they announced the Binance settlement, one of the folks that was part of that announcement on the government side, when she was on the podium, she basically said, this is a warning to both centralized institutions and DeFi platforms and protocols that you need to get your act together or we're coming for you. And so regulation, whether we like it or not, is coming into the space today. My hope is that the positive benefit and side effect of that is it's going to help us restore faith with consumers and allow us to get back on a, up and to the right rocket ship of growth that more closely mirrors really what's happened with the internet and with other technologies that have just been woven into the mainstream of everyday life.
Yeah, yeah, I agree. And my final point in that would be as well, I think a lot of, whether it's consumers coming into the crypto Web3 space or businesses trying to adopt the technology, a lot of them I've found that maybe don't want to dig too deeply. They listen to and digest a lot of the bad news stories, the fraud stories, the corruption, the organized crime stories that relate to crypto and Web3, and that's what they think the space is as well. So I think I think that also, like you said, hinders adoption greatly. Shifting back into Netki then, and talking about governments and regulation, you've been working really kind of exciting project. One of the countries that's been at the forefront of being vocal about adoption of crypto, in particular Bitcoin, is the government in El Salvador. And so Netki has been working, providing KYC and anti-money laundering services to users there. Can you tell us a little bit more about that, please, Justin?
Yeah, just to start out, and then happy to go with any follow-up questions here. If I'm honest, that was probably one of my favorite projects to work on here, really for a number of reasons. The first reason, and probably the most important reason, is, it was a project around real financial inclusion. Before the Chivo wallet, which is the government Bitcoin wallet, the government-backed Bitcoin wallet in El Salvador, before the Chivo wallet, only about less than 25% of the population of El Salvador had access to online financial services or banking of any kind. And, literally in the first couple weeks that we were live with them, we had more people in the country online and able to transact using the Chivo platform than the banking system in the country had been able to onboard in the previous 30 years.
Wow.
And so, this is a great story around being able to create financial inclusion, giving more financial tools to everyday citizens. For example, we have some employees down there, and one of our employees prefers to be paid in Bitcoin. And so when we pay him every couple of weeks, I send a payment to him from Netki's Lightning wallet. It's in his Chivo wallet, less than a second later. And he's able to either go to a Chivo ATM and take that out as cash if he wants to have US dollars, literally that 1 or 2 seconds later, or he is one of the fortunate people who has a bank account. He can actually have that balance transferred into his bank account in 2 minutes. And all of that cost me, I don't know, a fraction of a penny in fees to get to him. And the internal transfers don't cost him really anything at all. And so if you compare that to trying to do an international payment for payroll, right, that wouldn't be there in seconds. If we're lucky and decided to do an international wire, it might be there in 24 hours. And if we did something else, it was going to be much longer than that. And the fees would be consummately much higher as well.
Yeah.
And so that ability to really enable the folks there. Now, all of that is based around, having a solid identity, which, we've effectively turned into a digital identity for Chivo, although it's not a reusable one at this time. So one of the big challenges the Chivo wallet had, and this is something you could read about in the press, so we're not giving any secrets away here, is before they brought in Netki, they had a massive identity fraud problem where, Chivo was giving out $30 in relief funds when you created your Bitcoin wallet, which is about 10% of monthly GDP for folks there. So it was a meaningful amount of money to the people that were on the ground. There were unfortunately people that wanted to take advantage of that and take money that wasn't theirs and siphon it off for other purposes. We ended up stopping a massive amount of identity fraud that before us you could have read about in the New York Times or the Guardian. And, after us was eliminated the day they took us live. As a result of that success, they've decided to actually move to an identity-based security model for their wallet as a whole, where anytime the user does something that, might be an issue or might cause some concern, like changes the phone the application is on, the phone number associated with it, the password, escalates their level of privilege, we use that, one-time identity check that we did and just redo a quick liveness and biometric check to ensure that the owner of the wallet is still in control of the wallet. And, this has proven more cost effective than the other mechanisms that they had to do this, which included call centers and face-to-face interaction. It's also not vulnerable to corruption, right? Our software operates the same way every single time, and, you can't bribe it. And so it's actually dramatically improved the security of the wallet, while at the same time reducing costs for the government of El Salvador and allowing users to make any of those changes, in 10 seconds from the privacy of their home.
Yeah, it's fascinating. What would you say, just do you know what the level of adoption, you spoke about how low and the access to finances that citizens and individuals had within El Salvador, I can't remember, the figure you mentioned was very 20 something percent. Do you know what that is now as a result of the work that you're doing and the fact that they're using digital currency?
So, I can, again, with that, I can only talk about numbers that have been made public before. But, in this case, the population of El Salvador is right around 5 million people. And we onboarded 4.5 million into the platform. And that was news that came out maybe a month or a month and a half after they brought us on to do the
Oh, so kind
service.
of 90% or something. Yeah, that's impressive.
Yeah, it's a really big number. And as people turn 18, we see them pop over and come onto the system and start using it. And then, I can say, because this has been talked about as well, you both see more active users on the platform, typically month over month, and the users who are using it do more transactions each month. And so, it's integrating itself into daily life. I lived down there actually for about a year. It was during the COVID period, so everyone was working from home anyway. And frankly, El Salvador is a really nice place to work from. The weather is really good. They have decent internet, and you can rent a nice house by the beach for like a couple grand US a month that would cost you 10 or 15 grand US a month in the US. And so I spent a bunch of time down there, both because our largest client was there, and also it was just a great place to be visiting. I can tell you from my side, one of the things that I really loved about the project was going and waiting in line in the supermarket and watching the people in front of me in line pay for their groceries with the Chivo wallet. Because it allowed me to know that the project that we were working on actually had a real impact on everyday lives.
Yeah, that sounds great. Yeah, it's really nice to be able to see it in action. I wonder as well, I know that kind of Max Kaiser and like Simon Dixon and people like that are kind of representatives, I guess, of the project. Did you come across those guys in your travels as well down there?
I never ran into either of them, although I do. So there's a Bitcoin Association of El Salvador that I'm on the advisory board of, and Stacy, Max's wife, is on the advisory board there. So she and I connect through that.
Yeah, and do you see other, like from your position, Justin, do you see other nation states or countries following suit and starting to use Bitcoin? And do you see like government backed digital currencies or central bank backed digital currencies, taking off anywhere else anytime soon?
We definitely see countries that are on the path to that, right? And so there was actually just an announcement this week, and it was a commercial level bank, a commercial level transaction, not a consumer level transaction. We're actually here where I'm sitting in UAE, did their first central bank digital currency transaction between here and China. And as I said, that was initially a commercial transaction, but I understand that on their roadmap is actually moving this down to the consumer level as well. And so I do see other countries that are moving in that direction. But in general, central banks are very risk averse. And so they typically, they're not going to move at a startup pace, right? They're going to try something. They're going to let it run for a while. They're going to sit back and evaluate risk, and then they're going to do the next step. And so, I don't see like 20 countries popping up next year and suddenly having a retail currency. But I do see steps in that direction. And I think also what they're going to see is you'll see countries come out with strong stablecoin frameworks. And that will become a path to central bank digital currency adoption because it again allows them to examine the risks on a smaller scale before committing the government to a direction.
Yeah, I agree. Shifting gears a little bit, Justin, at the start, when you were kind of introducing yourself and what brought you into the space, you kind of talked a little bit about spotting some of the issues that the Web3 and specifically DeFi platforms, the types of problems that they were going to encounter. Those are typically at the moment things like compliance and anti-money laundering regulations, their ability to adhere to those. And so you've written that there's a clear need for DeFi protocols to start to take AML and other compliance requirements seriously. Can you talk a little bit about why you believe that? And also then how does Netki help solve that problem for DeFi projects?
Yeah, I'm absolutely happy to talk about that. And I think that this is going to actually be an area of massive focus and growth in our ecosystem over the next year. Why do I believe it? I mean, the reason I believe it is we spend a lot of time talking to regulators. I've talked to the FATF, I've talked to US regulators. As part of the program that brought me to Abu Dhabi here, which is something called the Hub 71 program, is actually very closely affiliated with ADGM, Abu Dhabi Global Markets, the local regulator. So I've had interactions with the folks that are responsible for digital assets and DeFi here, and all of them just flat out tell me, that regulation for DeFi is coming. Canada is actually talking about their DeFi regulations right now after they just finished their stablecoin stuff. And so for many countries, they basically are following a path where, they come out with basic digital asset regulation. They move from that into stablecoin regulation, and they move from that into DeFi. And that seems to be the progression and path that folks are going down in terms of regulatory focus. And so for the jurisdictions anyone's operating in, they can sort of see where they're at on that slider and what's coming next. No one's gotten to the thing after DeFi yet, so I can't tell you what's coming after that. My hope is actually reusable identity for compliance purposes is going to be high on the list so that people have a more predictable framework around that. And we are having initial discussions there. But going back to DeFi, there's really two paths that regulators are taking. There's the path that the US is taking, which is saying, in essence, our existing financial regulations tell DeFi platforms what to do. And so therefore, if you're a DeFi operator, you should look at what a CeFi institution or centralized institution like a bank or a stock exchange or a broker dealer need to follow. And you should just assume you need to follow those same rules as well. And, this is a place where in the past, our industry has had some challenges because they've either said, well, we can't do that, which isn't always true. Or on the other side of it, they might say we have a better way to do it. And eventually you can get the regulator to your better way, but usually you can't start there. The regulator is pretty risk averse. They want to see what they're used to seeing. And then once you've proven that you can do that, then you can show them there's a better path versus trying to go right to something new. So there's places that are saying, just follow our existing regulations as if you were CeFi. Then you see places that are, they may have a more nimble regulator or one that's more focused on digital assets. So think of places like here in UAE, both in Abu Dhabi with ADGM and in Dubai with VARA, MAS in Singapore, HKMA in Hong Kong. Again, I know that Canada's talking about this, where they're actually going to come out with bespoke regulations for DeFi. And in these cases, you might see some tuning around the edges from what CeFi institutions are expected to do. But again, the controls are going to be very similar, right? And, think about how travel rule regulation came into crypto. At first, the industry said we have analytics, we don't need travel rule. And, the regulator said, well, analytics are awesome and we love that, keep doing that, but you also need travel rule. Right. And so I think the same thing will happen with DeFi. And again, the discussions we have directly with regulators are telling us exactly the same thing. So what we've done at Netki as a result is we've actually built a tool that we call DeFi Sentinel. And what DeFi Sentinel does is allows you to put in bank grade or securities exchange grade compliance directly into any smart contract or protocol, where all the complex compliance decisions are made off-chain, and then a signal is sent to the on-chain protocol that lets it know that it's safe to proceed. Now, obviously, at the core of any compliance procedure related to finance is identity. And we actually use, these reusable W3C, Web3 credentials at the core of the platform and the core of the decision-making, alongside of things like traditional wallet screening through people like Chainalysis or Crystal Blockchain or TRM Labs or people like that. Traditional financial monitoring, so things like velocity, volume, structuring, those kinds of things. Securities compliance and tax compliance.
Yeah, there's a lot going on. And I guess are you
Yeah.
are you finding as well, Justin, that a part of what you do, I mean, you can put kind of like platforms in place that have a lot of this logic built in. Are you finding though that for different jurisdictions you have to adapt that based on what you're seeing the different regulators' approach to compliance is? Do you have to do a lot of adaptation as you go, or do you tend to find that for the most part, once you build a solution, that's something that you can roll out across multiple markets?
Well, I mean, the solution can be rolled out against multiple markets, but the rules that get engaged are different depending on the market. And the market can include both, where is the organization located, but then also where are their clients located. right? If you serve EU clients, you need to follow MiCA. If you serve US clients, you need to follow Department of Treasury's rules, even if you're in another jurisdiction. And so, one of the things about having operated in the space now for close to a decade is, we've actually already built a very complex, sophisticated, modular compliance decision-making engine. And we're getting to apply that. And it already had jurisdiction by jurisdiction rules. And so we're now getting to apply that in this new area for DeFi, having literally man decades of development, maybe over a man century of development in the platform that makes those decisions in a highly reliable, highly compliant, high velocity manner.
Yeah, interesting. And just for my own interest, Justin, one thing I was never sure about, kind of pretty ignorant about, was with a DeFi platform, the defense often was, someone that's created a project, they might not even know who that person is. It could be like a GitHub handle or something. You hear about lots of these kind of anonymous characters building these platforms, and there's no company or even a kind of formal legal structure around the creator of that platform. How do regulators deal with that? I mean, that must be pretty tricky. I mean, who do they shut down at that point in terms of trying to regulate these DeFi platforms?
Well, I mean, they have a couple of tools that they can bring to bear. One, there have been a lot of people that believe they've been the anonymous creator behind platforms that the feds have decided they don't like, right? There's Russ Ulbricht at Silk Road. There's another number of others out there, and frankly, the federal government and others are quite good at unmasking people. You only have to make one mistake for them to track you down. And even people that are very sophisticated in privacy, will often make one mistake. The only example I have of someone has, that's been tried to be tracked down for a very long period of time and no one has is Satoshi. And he's literally a mythical figure.
It could be a they, couldn't it?
And it could be a they, right? It could be more than one, whatever. And to be honest, we don't know if the federal government has unmasked them or not. But we do know that as much as the rest of us have tried, we haven't unmasked them. But other than that, anytime there's been a serious effort to dox or to unmask someone, they've pretty much ended up being, unmasked. So there's that side of things. The other things is that the regulators have other tools to steer people and users away from certain platforms, right? So as an example of that, I would use Tornado Cash. And while they did actually, and Tornado Cash was a mixer that ended up mixing a bunch of funds for the North Korean government and basically concealing where those funds were going to and coming from, right? And yes, in that case, they did actually get the founders of it. And one of them is either in jail or waiting to go in jail. And I think the other one is maybe in hiding. I'm not sure. I haven't followed it that closely since the original moves there. But the other thing they did is they sanctioned the smart contract. And when they sanctioned the smart contract, that does a few things. One, most individuals and people are going to choose to not interact with something that's sanctioned because of the risk that it creates for them. But two, if they do choose to interact with it, it means that any other service they try to try and interact with is going to ask them a bunch of questions and maybe block their wallet from being able to be used, right? It's going to actually create a lot of friction for anyone that interacts with that protocol when they try to interact with anything else. And so they have tools both to go after people that they consider to be bad actors, whether we agree or not, but they also have tools to limit access to protocols, smart contracts, dApps, that they feel are harmful from an anti-money laundering or counterterrorism financing perspective.
Yeah, there's a few different levers that they can pull there. Yeah, that's really interesting to know that. I don't know how you find the time, Justin, given all that you've described that you're doing already, but another project that you've been involved with the World Economic Forum was actually chairman of the policy working group on digital identity. And as you know, I think it was released last year, there was a really detailed, very insightful report into decentralized identity technology, or certainly when everyone at DOC really enjoyed it. Could you tell us about the business benefits of adopting decentralized identity technology, and what those benefits are for both Web3 companies and more traditional, what we might call Web 2 companies?
Absolutely. I'd be happy to talk about that. And honestly, I was super proud to be able to work on that project, and in particular with the quality of the output that came out of it. The team that I ended up working with on the policy working group, and then the broader team that worked on the other sections of the paper, I felt like we came out with a really strong document that was both supportive of growth of the industry and the ecosystem, but then also, pointed out the places where there's additional work to be done, either on the policy side or on the technology side, to ensure that we can get to the promised land that we want to get to with all of this. In terms of the benefits to, both traditional businesses and Web3 businesses, they're really very similar in terms of what those benefits are, right? The biggest is, well, I'll start with some of the smaller ones, right? There's cost benefits, right? KYC and AML cost money, and it just does, right? It costs a few bucks every time that you want to onboard someone, not even counting the internal labor to your team. So that's paying tools providers like us and others to onboard a user and get them onto the system and platform. So being able to reduce that cost and to either put that cost into more go-to-market resources, or investing more in your product, or into other pieces of your business, or perhaps passing the savings on to the user. Those are all benefits that you can create as a business that'll help you grow and help you scale, rather than focusing on, frankly, repeating something that someone else has probably already done, right? So that's obviously a benefit on cost. But I think the bigger benefit, and this is a benefit both to the organizations, but also to the end users, is just a reduction in friction. We do everything that we can to make the KYC process smooth and easy for users. We, coach them through the process. If they make an error, we try to catch it in real time so that the user can correct it while their phone is still in their hand and their ID is still on the table, and do other things to smooth and ease the process for the end user. It's one of the reasons we were successful in El Salvador, right? A country where most of the people had never been through any KYC before, much less digital KYC. But no matter what you do to make the process easy, it's friction, right? I might not have my ID in my pocket right now. I might not feel like, installing this on my phone or going through this on the web browser on my phone. There's always the chance that the first time through it's not successful. And, I have to go through it again. And so there's friction for me, the user. That becomes a barrier to adoption to the platforms that are utilizing it. One, I may decide I don't want to do it, that's, too much of a barrier for me, because I don't feel like doing that right now. It takes a whole 30 seconds of my life, and that's more than I'm willing to give right now. There's also like a mental hurdle when you start taking your ID out of your wallet, right? It feels like you're doing something real when you go ahead and do that. And then, in the case that initial KYC fails for some reason, there's terrible lighting, the person takes a photo of their shoe instead of their document, whatever reason that they might have that it fails on the first try. Well, now if I'm a platform, let's say I'm a financial services platform or a shopping platform or whatever, by the time I get back to the user to give them another shot at onboarding, they may have decided to do something else with their money. And so now I've gone through the effort of marketing to the user, capturing the user, getting them through the decision path that they wanted to use my service, and they end up going away because the onboarding piece of the project was just too much for them. And by going with a reusable credential, they've already gone through that pain one time, right? And now when it comes up, they're basically asked to scan a QR code and push an approval button on their phone, which to the user, even though they're giving away effectively the same information, although we'll talk in a second, they're actually giving away less. It feels simpler and easier to them. It feels like less of a mental hurdle to them. And, it's effectively always going to be successful on the first try. So there's not going to be like a time delay where the user isn't able to use the service or utilize the service as a result of an issue in the KYC process. It does also protect the privacy of the user, as well as protect the liability of the company collecting the credentials. Because in order to KYC a user and just get their name and birth date, and maybe country of residence, I actually have to collect a lot more data about them to do that. I have to scan their passport or their driver's license that might have their home address on it, that has a national identifier on it that could be used for other identity fraud purposes. I may have to collect their phone number as a part of the flow or other things, because these are all used as points to triangulate to make sure the two or three things that the person actually, or that the corporation actually needs, are accurate and well validated. Well, if again they just need my name and birth date and country, I can share literally just that, and not my biometrics, and not my home address, and not all of these other things that could be used to steal my identity. On the entity side, PII is like radioactive material, because if it gets stolen, you have liability around it, and so you have to build basically a PII containment system to make sure that none of it leaks to the outside, and there's cost and expense around that. And the more PII you have, the bigger the liability, and so the more you need to spend on the containment system. And then, God forbid, your containment system leaks, you have a PR nightmare as well as potentially financial liability. So, utilizing reusable credentials reduces that liability, reduces the size of the containment system, and reduces the cost for the corporation, and reduces the risk for the user that what they've given away can be used for other purposes.
Yeah, you framed it really well there. And I think, Justin, as well, we recognize that the verifiable credentials and decentralized identity technology is obviously very new as well. And so it comes with its own challenges in terms of individuals using it or companies incorporating it into their solution. Could you highlight some of the challenges on the other side, please?
Yeah, I mean, there's a few challenges that come in, and you've highlighted it. Well, with any new technology, particularly one that needs two sides, you need two-sided adoption in order for it to work, right? You need the producer and the consumer, right? And sort of the classic way that it's talked about, I guess, works with people that might be of our generation. It's probably less worthwhile today, but it was really hard to sell the first fax machine, because you needed somebody on the other side that could receive the fax that you were sending. Right. And so until it reached a critical mass, it was hard to do that. And then once it reached a critical mass, everybody had to have one. Right. And so there is a lot of challenge around how do you create the demand on both sides at the same time. And it's actually one of the things I really like about the DeFi compliance tool we created, Sentinel, is we can both issue credentials for the user, and then we can consume them inside of Sentinel for compliance purpose. So it gives the user a reason to have the credential, and the business is then able to consume it or use it for a business purpose. In addition to those kinds of two-sided issues, there's also, frankly, places where it can use some regulatory support. In particular, in many jurisdictions, it's unclear whether or not reusable identity can be used for compliance purposes, or if it is used for compliance purposes, where the risk lays. Is it with the issuer? Is it with the person that's actually doing the usage of the credential? Where does that stand and where does that sit? And so I think that there can be help in terms of clarifying that in terms of regulation, potentially wrapping some insurance around it so that, wow, where did those bubbles come from? So that the liability issues can be clear and can be cleaned up, and other pieces that help lay the groundwork for this becoming a really solid identity. As an industry, I think we can actually take a look at what happened in the mid-90s with X509 and SSL, where there were actually laws and regulations that came into place that said, if you do these things, then it can be relied on for these purposes. This is how the risk lays out. This is how you get, frankly, licensed to be able to issue these kind of credentials in a safe and secure manner. And we've seen some of the early pieces of that coming into play with W3C credentials, with things like COVID credentials being given validity when they were issued as verifiable credentials, and other things we're seeing. So that journey has already begun in the reusable identity space with verifiable credentials. But if the path is this long, we're this far into it.
Yeah, really interesting. Do you see business model, just on this issue, just to kind of close it off, Justin, do you see business model being a factor here as well? one thing we come across when we speak to companies is a lot of the times the beneficiary of the verifiable credential is often the user or the verifier is benefiting, but actually the entity that spent the money issuing the credential doesn't necessarily see a benefit immediately or at all. Do you think that's also a factor?
I think the business models around this are going to be evolving, right? And so I do see, some verifiable credential networks that do involve payment back to the initial issuer of the credential from the verifier. So there's people that are trying that out as a business model and seeing how that works. That payment back is less than it would cost to do the initial KYC. And so, they're getting some money back. So they took something that was exclusively a cost center and turning it into a revenue center. On the other side, and so that piece is coming up. There's others that, we're talking to that just frankly see it as a benefit that they can offer to their users. And so it becomes a part of their marketing message of, you have to go through this KYC anyway, but at least at the end of it, we're going to give you a reusable credential in addition to access to our services. So hopefully your life can be a little smoother and easier in the future. Right. The other thing that comes up from a business model perspective is the thing I touched on before, which is where does the liability lay? Right. And in the case of, again, if I go back to X509 and SSL, there was a concept of a relying party agreement where inside of the RPA, it would say, for example, like this credential can be used for these kinds of use cases. And like this is the maximum liability that can be accrued if it turns out to not be true. Right. We don't have a concept of that, or at least I haven't seen a concept of that yet inside of verifiable credentials. But I think that layering that in is actually going to become a critical step in helping with adoption, because it helps define for both issuers and relying parties what the business arrangement actually is and what it is they're taking on, and sort of makes it predictable and containable versus right now, everybody's like, I don't know what's going to happen.
Yeah. Yeah, and businesses want certainty, don't they, so they can build on something. So yeah, that makes sense. And actually, we're working on a kind of version of Verifier Pays Issuer ourselves. So yeah, the model you suggest is something we're familiar with. Shifting pace, Justin, then, so crystal ball time a little bit, like where do you see the future of identity verification going? There's quite a lot of new technologies that are coming out. You've spoken a lot about like a lot of the really interesting specific use cases that you're working on. Where do you see this all going?
Yeah. So I mean, one, we're early in this process. So any predictions I make are gonna, maybe if I'm lucky, they're gonna turn out to be materially correct, but are gonna end up being, at least a little bit wrong.
We'll put a
But
disclaimer for you in the show notes, Justin.
yeah. But from my perspective, I do think, reusable identity is the future. I think that their validators are going to be an important part of that process for a long period of time. Governments are good at issuing identities. They're not good at maintaining the life cycle of a reusable identity. And, as one example that I give of that, there was like a 3-year period of time where every time I crossed a border with my passport, the border agent would ask me, particularly coming into the US, has your passport been stolen in the past? They never asked me before that. And then suddenly, every time I came into the US, they would ask me that question, has your passport been stolen in the past? And I was like, no, it hasn't. And then finally, I got, a border control agent. I'm like, why do you keep asking me this question? Like, you don't ask anybody else this question. You're suddenly asking it. And when they dug into their record, it turned out that a Justin Newton from the UK, and I'm from the United States, so a different country, had their passport stolen. And, I'm going through a US border, and they didn't know it was their own credential that wasn't stolen, right? They were the issuer of the credential. And so that's just a really simple example of how they don't do a great job of like maintaining the life cycle of a credential. They're good at issuing it. And maintaining the life cycle is actually more challenging than just issuing it, because you need to ensure that every time that credential is shared, that it's shared by the owner of the credential and not someone that's stolen or compromised that. And so I believe there's going to be a strong place for industry in taking one-time issuance and turning it into something that has a life cycle. Maybe eventually governments will get good at it, but I'm not optimistic that that's going to happen in the short to medium term. And so, one, I think that reusable credentials are going to be the future of this because it's faster and easier. And one thing we didn't mention earlier is, the enemy of fraud is time. And so the longer a credential is in use and the more that it gets used, the more likely it is that it's actually that person, right? And so not only is it faster and easier, it's also better than going through one-time identity validation over and over again. Because if the reusable credential gets compromised once and that gets reported back, you can revoke it. Where, if someone gets through a KYC process with stolen or fraudulent documents, and let's say we block them, well, they can just go try someone that's using another provider that maybe doesn't do as good a job of fraud prevention, and they may be able to get through. Versus if it's a reusable credential and it gets compromised, we revoke it, and then it can never be used anywhere again, right? And so it's faster, it's easier, it's cheaper, it's more secure. It's got to be the future, right? We just have to get all the way there.
Yeah, that's a great point. Yeah, it's a really good point. AI is obviously a hot topic, and generative AI and its ability to, I don't know, pretend to be us through deepfakes and things like that. Do you see that as a major threat, Justin, for us being able to identify who we're speaking to and who we're interacting with? And if you do, is there anything that Netki's working on to try and mitigate that problem?
Yeah, so we're already incredibly strongly deepfake resistant. From the way we designed our system, frankly, from day one, the defenses that we put in place, end to end, where from the mobile SDKs all the way through the back of the platform, were designed to defeat fraud. Right. And the most common form of identity fraud that you see in online services is actually replay attacks, where people have stolen credentials that were shared, like, with Exchange A, someone hacks into Exchange A, steals all the pictures of the IDs, all the selfies, and then tries to replay them on other systems for KYC. It's actually like the fraud attack that we saw against Hedera Hashgraph when they were first launching their network back in 2016, 2017, I forget the exact year. Even back then, we 100% blocked those types of attacks, those fraud attacks, after one of our competitors just let them all through. Like 90% of the accounts that were created initially on the platform were fraudulent before we came in and blocked them, and it was because of these replay style attacks. Well, a deepfake is effectively a replay style attack. And so the same tools and controls that we put in place to stop that, as deepfakes have come out, deepfake videos and others, frankly, we've made a little tweaks here and there, but the core design that we had put around our fraud prevention already caught them. And that's something that I think may be unique to our platform today in terms of our competition. With others, there's always a way to sneak the video into the system or into their platform, where with ours, you can't do that. And so do I think that it's going to be an issue in the industry? Yes. Do I think it's going to be an issue for our clients? No. We're watching what's going on there. We're ensuring that we're going to stay ahead of it. And, even after we've seen reports in the press that other companies, even very large companies with big dollar spends in the identity and compliance area, were having issues, our customers will tell you they haven't seen a single one come through.
Yeah, and that's proof that it's certainly working as well. Justin, you've been amazingly gracious with your time. I don't want to impose any more on you. It's been a really interesting discussion, and it's certainly run on. Is there anything that you'd like to illustrate to the listeners before we wrap up?
Nothing specific. I would just, urge them to kind of keep their eyes on the space. I think there's a lot of exciting things happening, and I think that right now we're at an inflection point with respect to these reusable credentials and reusable identity. That it's just going to take a tiny spark to start a blazing fire that leads to massive growth. And I can't wait to see it happen.
Yeah, likewise. Makes two of us. Justin Newton from Netki, many thanks for coming on Identity3.
No problem. Thanks for having me, Nick.